What's up, everyone? Welcome back, and if it's your first time here, I hope you stick around. We're going to go through the markets today and see what price action is telling us, see what the key levels are, and if there's any bullish or bearish edge on the charts. So we did see a lot of volatility last week with Powell coming out, being very hawkish, doing his 75 basis point rate hike, and we also did see more earnings reports coming out. So as it stands, and we left off on Friday, the S&P was up 1.36%, the Nasdaq was up 1.28%, the Russell was up 1.13%, and the Dow was up 1.26%. All right, so let's get into the S&P. So on Friday, we did see a gap up with, very violent swings. What was this percent? From the top of the day to the low of the day. You're swinging about 2.25% throughout the day, and you did end up closing positive on the day, and you had a green candle. It's kind of an indecision candle where you are currently confirming what was resistance is resistance again. Your negative momentum hasn't begun to build yet, but your positive momentum is waning on your MACD. Your RSI is in neutral territory. You did see some high volume on this indecision candle, so I'm very curious to see if we have any follow through and break past this resistance on Monday, or if we get rejected and see the bottom of this range here, which had been support from June. Taking a look at the S&P on the weekly, you are above the 200 moving average. You are back above this critical support resistance from August 2020. You still have this bullish divergence maturing as negative momentum is beginning to wane and could go positive or start to build negative momentum again back down to the downside. RSI pointing down, below neutral, approaching bearish control zone, and you do have this bearish harami candlestick kind of right here for the week. Let's see if there's any follow through to come back down and test the bottom and see and confirm this is support again, or if we just invalidate this and continue to see the top of the range. But as it stands, you're just kind of in the middle of no man's land between these two ranges here, and we'll see what follow through is on Monday. You did see significant volume on the week for this potential bearish harami. Let's see if there's any follow through. So taking a look at the Dow Jones on the daily, you did gap up from the previous day. You are currently back testing the 200 moving average as resistance. You do have this form of bearish divergence on the MACD from your previous discernible swing high to your next swing high, which happens to be a lower high currently, with higher levels of positive momentum on the MACD relative to your previous high, which has lower momentum on the MACD. RSI still in bullish control zone. You could just even start to begin to build positive momentum again and not see any follow through, but for that to happen, I'd like to see you back above the 200 moving average on the daily and break out of this downsloping parallel channel where traders took profit at the top of a range, where technically when you are at the supply line of the parallel channel, you are overbought. Dow Jones on the weekly, however, what have you done? Your bullish divergence on your MACD has now begun to mature. You are seeing positive momentum beginning to build. You are still about neutral on your RSI, where you did have bullish convergence as well from one low to the next to your lowest low. Traders took profit at a profit-taking level. You're holding historical support, which was regarded as support from March 2021. And that's the second time you're now holding this on the weekly, back above the 200 moving average. Let's see what Monday ushers in, if we have any follow through to the upside, and if we can hold this level at 32,047. All right, so taking a look at the Russell on the daily, you could potentially be putting in another higher low, but currently you have some type of form of bearish divergence on your MACD from your previous high to, if this was your lower high, from positive momentum low to a higher positive momentum here on your lower high. RSI holding neutral, curling back up to approach the bullish control zone. But if you are putting in a one low, a second low, and then a higher low, you could potentially see the top of this target one, and depending what the follow through and if there is more bullish sentiment, target two. So not anything technically damaged on this chart. We'll have to see if there's any follow through that ushers in a reversal to the downside, and let's see if these levels here hold. If not, you'll be seeing the next level at 1600. Taking a look at the Russell on the weekly, which I think this is the secret story nobody's talking about, is you have this beautiful bullish divergence maturing, and you're now starting to see positive momentum beginning to build on your MACD. However, you do have this bullish divergence not playing out as of yet on the RSI as you're pointing down in neutral. We'll have to see if there's any follow through that pushes this back into the bullish control zone, but as it stands, you are in neutral, but you do have this beautiful bullish divergence on your MACD where positive momentum is beginning. And what else are you doing? You're also now holding the 200 moving average on the weekly as support as it stands. Let's see if there's any follow through next week to where we can resume price action back up to the upside, or if we're going to test these lower levels down here and see if they hold. Taking a look at the Nasdaq on the daily, you do have this very solid form of bearish divergence from one peak to your relatively same high, with higher levels of positive momentum, with now negative momentum beginning to build as you are holding the heart line of this downsloping parallel channel. And you did have a reaction off there where buyers did step in, and you weren't able to get back above this inflection point. This inverse head and shoulders argument, not dead yet, but dying. If you do see prices break that back below down 10,120, this is going to be an invalid momentum shifting structure at this point. But right now, I'd like to see you get back above 10,523, and then what would you potentially be doing? Putting in another one low, higher low, if this holds. If not, and you break back below this bullish engulfing candle, your argument is now over, and you'll likely see the bottom of the range at 9,830. Let's see if we do get some follow through on this bearish divergence from your MACD and on your RSI. One high, same high, higher levels of positive momentum, ushering in a reversal now. As hard as buyers tried and pushed prices up, they just could not break these levels. Taking a look at the Nasdaq on the weekly, big yikes. What have you now just confirmed? 200 moving average on the weekly is now resistance once again, back below critical inflection points where you desperately want to be back above to be bullish. You do have this argument where there is bullish divergence on your MACD and your RSI, but as you begin to be in an area where you can see positive momentum start to build, what happened? Negative momentum starting to build again. Let's see if there's any follow through to invalidate this bullish divergence. You are in the bearish control zone on the weekly RSI, and you are being rejected at the 200 moving average. I do have this parabolic channel curve as support from October 10th. If you retest these lows and hold, could be a good buying opportunity if you want to step in there and keep your short or your stops marginally below this line of inflection. But you've held this parabolic channel since March 2009. So we'll see if this continues to act as support, or if we break low and head down to the next level. But with this amount of bullish divergence, you'd think you'd see some price action reversal to the upside, but as it stands, you're under the 200. All right, let's take a look at the dollar on the daily. So as you see, it looks like you do have these three falling peaks here with your one high, lower high, and with this huge bearish engulfing candle engulfing 1, 2, 3 prior trading days, and significant follow through to the downside. Let's see if we can get back above this level if you want to be bullish on the dollar. If not, you're probably likely headed to the lower range, 107.68. I think the story on the dollar is really telling on the weekly. Look what you've done on your weekly. Bearish engulfing candle, follow through, and as buyers step in to push prices back above this local support resistance, you have now confirmed it as resistance as buyers push price back up and were rejected on the weekly. And what else are you doing on the weekly? You do have from your one high, your higher high, your highest high, MACD, high, lower high, slightly same high, lower high on your MACD, RSI, one high, lower high, same high, creating a bearish divergence, triple, and triple bearish divergence again on both oscillators. I do anticipate this to continue down, see the bottom of this range just based on this one previous candle where sellers stuck back in at these levels, and you are seeing negative momentum about to build again. However, RSI is still in the bullish control zone, so this could even come back and back test again. I'm not interested in the day-to-day swings and the volatility. When you're looking at the weekly, I mean, zoom out. Zoom out. That's all you can do, right? In this parabolic uptrend you have here, where are you now currently? You're at the top of the supply zone where technically you are overbought on the weekly with bearish divergence on both oscillators. Will this usher in any follow through to the downside? Maybe. We'll have to see, but don't get too concerned on the day-to-day. Take a look, you know, on every Friday. Where have you gone? And if you do see huge momentum to the downside throughout the week, be aware of your levels. Next level 107.63. Taking a look at the VIX on the daily. So we were talking about this bearish divergence from last week from your one high to your same high. One high on momentum, lower high on positive momentum, and you had this on both oscillators, and you did see a significant follow through to the downside. And then I called out also when we were back testing the 200 moving day average as a possible bearish back test. Once confirmed, twice confirmed, follow through to the downside, and you are holding this demand line from June 2021. So does this continue to hold and usher in a reaction or reversal to the upside on the VIX? Maybe, but I think this thing is just being so suppressed to have this methodical sell-off. You know, it's wild. I'm not sure, but we could see a reversal here just based on the technicals. You have found historical support here. You did undercut it, but got back above it. So if you do hold this, look for a rally in the VIX. If you can get past 24.86 and then 26.09 back up to the upside, and then looking to get back above the 200 moving average. So let's take a look at the weekly. So looking at the weekly, you can even see more downside to come. If you start to break actually this demand line here, as you haven't even seen negative momentum on the weekly since the 12th of September. You could now start to usher in negative impressions on your histogram island as RSI continues to move down past neutral into the bearish control zone. So this could be great for stocks. You could come back down and test the 200 moving average on the weekly, which would be great for stocks. And if the dollar continues to dump with the VIX in tandem, you could have a nice couple short-term weeks. All right, so we're taking a look at USOIL on the daily. Well, what have we done? We are now starting to break out back above historical support resistance with a beautiful bullish engulfing candle where you have this idea of the inverse head and shoulders that we've been talking about. Positive momentum beginning to increase and build on your MACD, entering the bullish control zone on your RSI. Nice. Look for some follow through if we can get back above 93.14, above this previous swing high. What you don't want to see is you stall out here, find this as resistance, and work your way back down. We did call this out on the 4 hour, where we did have this bearish Gartley, and all we did was see it as a reaction. We came back down, target 1, where we thought potentially if we got rejected here, we'd come back down for a type 2 reversal. Didn't happen. We did see a bullish breakout. We also saw a spring back test of support and resumption to the upside. I do think if this is going to play out, your target is your previous swing high of 101.93 on USOIL. You are on your way where you have higher low, higher low, higher low. And of course, things don't go straight up. You'll zigzag your way up here if you can get back above 93.57. You did have some form of bearish divergence, which played out. You got a reaction, but nothing more. And now you are approaching the top of the bullish control zone around 70, but looking historically, you have room to run. And this is your 4 hour. So again, you'll have your zigzags throughout, but watch for continuation to the upside. So taking a look at USOIL on the weekly, actually, you haven't seen positive momentum on your MACD since June 13th. Your RSI is in the neutral zone. Let's see if we can get some follow through next week to the upside into the bullish control zone. And also at the bottom of the range, do you see what you did here? You have a Morningstar reversal where prices continuously selling off. You have your indecision candle followed by a bullish engulfing candle where you haven't even invalidated that yet, which would be a candle close below 79.63 to invalidate this bullishness. And you are now back above key levels of inflection to where you could see follow through price action to the upside. So let's continue to watch USOIL and see what next week brings. All right, taking a look at gold on the daily. Well, you did it. Congratulations. Finally, while everything else was breaking out last week, you have now gold putting in this 1, 2, 3. I mean, this is definitely a 3-line strike on the daily. I mean, this is a definite statement candle where you did even usher in triple bullish divergence from one low, same low, lower levels of negative momentum on your MACD, and the same on your RSI, where your RSI is back above neutral. You are seeing positive momentum beginning to build. Again, I would like to see us back above 1685 just to begin to be cautiously optimistic, not even the B word at the moment. Let's see us get back above here, and then we'll look to get back above this previous swing high. Gold on the weekly, you can definitely see where traders settled up, where the candle closes are. This is definitely a real level. It seems to even go back to February 2020. Traders are now finding support here for 1, 2, 3, 4, 5, 6 weeks in this range. Still below the 200-week moving average, but look what you're doing now. One low, lower low, one low, lower low, low, higher low on negative momentum, as you are now starting to see positive impressions on your MACD histogram island. RSI still below neutral, so get back above 200 moving average, get back above 1685, and don't get rejected like a scrub here and continue to the downside. So taking a look at silver on the daily, we did have this argument of accumulation where you had one low, higher low, third higher low, relatively same, with hidden bullish divergence on your MACD. Your RSI is in the bullish control zone. You are seeing higher levels of positive momentum on your MACD with a nice statement candle back above 19,846. If you want to continue to be bullish on silver, get back above this previous swing high, get back above the 200 moving average, and get back the previous level of inflection of 2168. Taking a look at silver on the weekly, like what are you currently doing right now? Testing the 200-week moving average. Haven't broken above. It's currently not resistance as of yet because you haven't seen any selling pressure. You've just had a very strong statement bullish engulfing candle on the weekly, and you're just sitting at the 200 moving average. Positive momentum building, RSI approaching neutral into the bullish control zone. But what have you historically done when you've rejected the 200 moving average? You methodically sold off back down to the next level, which is at 13.87. But I do think you are heading there on time based on the monthly, which our argument was your 2008 tweezer top reversal, where also you had in 2016 another tweezer top reversal. But something's different as new data is presenting itself on the monthly. You are back above your 200 moving average. You are back above this crucial level of inflection where prices have reversed or accelerated to the upside. So we'll have to see what ushers in next week and next month, as this is now beginning of November. You could even end up what you did October, where you had your breakout and then sellers step back in, pushes price back below your key level of inflection and your 200 moving average. So great start for November, but let's see what the follow through is. All right, so let's get into some of these tech stocks, starting with Arkk. You have broken this trend line of your reaction from your bullish Arkk, where you have now ushered in a bearish divergence on your MACD and your RSI from one high, lower high, one high, higher high on positive momentum. MACD looks like it wants to begin negative impressions. RSI is in your bearish control zone. However, buyers are defending this level, which is a very real level dating back from October 2017. Support, 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 support. Support, 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 support. So buyers are definitely defending this level. Let's see if there's any follow through to the upside, but just looking at your oscillators, it does imply impending price action to the downside. We'll have to see. Taking a look at Tesla, again, you do have this bearish divergence now where positive momentum beginning to wane. You do have your RSI in the bearish control zone. You have broken crucial inflection point of 209.07 with a candle close below the weekly, where we have this idea of 3 falling peaks. You still are broken below this level of inflection on the weekly, and negative momentum beginning to build again once it looked like it started to wane on the previous week. Still in the bearish control zone. Stay below 209.07 long enough, you will see 181.78 in time. Taking a look at Apple on the daily, we talked about this last week where I would have bids at the lower inflection point range at 134.42, and this was back when we were up at 151. So I mentioned how typically these bullish bats usher in a reaction. You've hit target 1, you were rejected off the 200 and the top of the inflection point. You held it for a day as support at 151.93. Following day, you had a bearish engulfing candle which broke back out of this level of inflection. And what we spoke about typically in between this range is straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down, straight up. Why not straight down again? And that's exactly what ushered in. Plus we even tagged the lower 134.42 where I did have some limit bids. Now my stop is at 138.02. And again, we did, trader settled up with the candle close above this level of inflection. And every time we've done that, you'll see here, reversal, 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 reversal. But with your negative momentum beginning to build on significant volume where you are in the bearish control zone on the RSI, we'll have to see if there's any follow through to the upside. But if I get stopped out at 138.02, I move on with my day, just look for another asset with different variables where I can potentially take another shot. Okay, so we also brought up PayPal last week where you did have this clear image of distribution. Lower high, lower high, lower high, lower high. And I mentioned if we do break down with a candle close below 82.76, you're likely to see the bottom of the range here, which was another level of inflection. You had your bearish divergence from your one high to your lower high on your MACD. You do see negative momentum still building. You are in the bearish control zone on your RSI. But look at the candle you printed. It is now dry. Is this Thor's hammer? Maybe. You'll have to see follow through. It's not always about the individual candle itself, but you are seeing a hammer candle at a level of inflection, but that's not important. What's important is the follow through. You want to see a bullish engulfing candle or any type of green candle after the fact. And if you do get that, you could potentially take a shot and have your stop below the body close of the hammer candle. We also talked about Amazon last week where if you do get a candle close back below 101.80, you would go straight down to the next level, where historically that's all you've done in between this range. Again, straight up, straight down, straight up, straight down. What are you currently doing? Now that you weren't able to maintain this level as support any longer, you're likely to see the bottom of this range again. Could you potentially come back up, bearishly backtest, then resume down? Absolutely. But as it stands right now, your RSI curling back up, but also it's in the bearish control zone. You do see negative momentum possibly beginning to wane while you see volume decreasing on decreasing price. You could get a short-term bounce here, but you're kind of just, in my opinion, in the middle of a range. But sure, there's a lot of chop in between where I'm sure at some point buyer stepped in and price reversed, but your major levels are what I have plotted here. Taking a look at Google on the daily, you are holding this level where buyers have defended since November 2020. You did get a candle close breakdown. So this is a bearish breakdown of this level of inflection. But what we were just talking about, it's not about the breakdown or the candle itself. It's about the follow through. What happened immediately after you had a bearish breakdown? Buyer stepped in, said not today, push prices back above, and you have candle closes back in the level of inflection where you most likely will close this gap based on the price action. But once you do break this level, you're likely to head to the 786. So if you get breakdown with follow through and stay below 85.11 in time, you will be headed to 71.93. So something I wanted to kind of bring to your attention was NNDM on the weekly. You are putting in a potential double bottom at a value perceived area of the 886 from this swing low to swing high. So this asset is on sale 88% from the top in January 2021, where you are having significant amount of bullish divergence on both oscillators with a potential double bottom. If you wanted to play this, you would not be owning this asset underneath 249. You had a very nice week last week. If you do get any pullbacks, this might be something you want to consider taking a shot at. But again, just keeping in mind the 886 is your stop. You are seeing positive momentum beginning to build on the weekly and approaching neutral on your RS. Another asset I wanted to kind of just bring to your attention is SOPA. So Society Pass Incorporated. Great. Right. What you're doing is you put in your lowest low of this chart's history and May of 2022. Right now you have dropped below that low and you've sprung back above that level. You've back tested it and now are reacting to the upside with positive divergence, right? You have bullish divergence on your MACD and your RSI where you're beginning to see positive momentum beginning to build at a point where you would expect to see negative impressions beginning to build. RSI breaking out of neutral, headed to the bullish control zone. So one low, nobody knows. Second low, potentially everybody knows. So nice development, something to definitely pay attention to. If you do get some price pullbacks to around this area, 149, you could take a shot at this with having your stop marginally below, just based on your springing, your back testing the spring, and price resumption to the upside. And if this thing wants to run, you'll likely see the top of this channel again at 244 in time if you stay above 149 long enough. So taking a look at Bitcoin on the daily, you're now finally back above this level of inflection of 19,891, where you can start to be more optimistic on price action here. Not bullish just yet, but you are doing the right things. You are putting in higher lows. You are seeing upthrust in price. Next one to get back above is this candle close high of 22.4. You do have this idea of a bullish shark, which seems to be beginning to start to play out now. RSI is in the bullish control zone. Positive momentum is still building. Anything back below 19,891, you'll have to flip bearish again. But as it stands, price is doing the right things for a reversal. So something that I think looks better than Bitcoin right now is Bitcoin Cash. You do have this bullish bat here at the pattern completion zone with bullish divergence on your MACD, and you're now breaking out of this Bolkowski structure to falling wedge and you are in the bullish control zone on your RSI. So an entry that you would have likely wanted to get in here is after your spring back test of 107, you put in this bullish engulfing candle. This could have been your signal to enter long, where you'd have a stop marginally below your bullish engulfing candle, because if prices fell back below your bullish engulfing candle, your argument would be over at that point. But just with how many bullish variables you have with your harmonic at the completion zone, breaking the supply line of your falling wedge with your bullish MACD divergence, and you now note on any type of pullback, look at your volume. Granted, it's the weekend and it's dead market right now, but this could give you a potential new entry if you miss this one. Set an alarm here at your supply line. What if you get a back test? Could give you a potential opportunity to enter this trade. Let's see what next week ushers in. It does seem that you have a lot of bullish variables on cryptos. Meanwhile, the Nasdaq is looking pretty bearish. So there could be some decoupling here. Curious to see what next week brings. And again, just based on the macro itself, this could all just fail. But as long as you know your levels, right? Anything back below 104 is death. This is your level of inflection, and this is what you're playing, is these bullish variables, your bullish engulfing, your structures, and your divergences. Alright guys, thank you so much for going through the markets with me. If there was anything that I missed or anything you want me to incorporate on the next show, please let me know. Leave a comment, hit that like, that bell, that sub, and I'll see you next time.